I am. Can you hear me?
Yes, we can. Welcome. Thank you so much for being here today.
Thank you for having me. Always a joy to be here doing these business builder webinars. So how's everyone today? I know you're all muted. That was actually just a rhetorical question. So today we are going to talk about value pricing and how to negotiate the value for the services that you provide to your customers. So what I want to do is say, first of all, thank you. I enjoy doing these webinars, first of all, but I specifically enjoy talking about value pricing. I have been a mentor with Ron Baker. I have worked with Mark Wickersham, and I also am a good friend of Tanya Hiltz. So these are three people that have taken value pricing in different paths. But from them all, we've been able to compile a webinar that may help you get through the value pricing situation for your customers. So I'd like to start with that today, okay? So for those of you that don't know me, who's not been on a webinar with me before, my name is Tammatha Denyes. I am the owner and CEO of TD Accounting Services. We are physically located in beautiful downtown Sterling, Ontario, which is just north of Belleville, but we virtually service customers across our nation and internationally. Personally, QuickBooks Online is our platform of choice, but we work with other applications that actually integrate with that platform. I am a very busy young lady. I am a certified professional bookkeeper with the Institute of Professional Bookkeepers of Canada. I am currently serving my second year on the board, and I have been lucky, I guess we'll call it, to have been provided with a number of awards this year, which I'm not going to go into. But the one thing that I'm actually very, very proud of is that I'm a golfer. And I have 2 holes in 1. So for those of you that see me at conferences, pull me aside and we'll talk about those 2 holes in 1. They were 17 days apart. I was very proud of that. That being said, let's move on to why you are here today, and that's to talk about value pricing. But before we get started, I do want to talk about some of housekeeping that I've set up. One, you're all muted. I'm sorry. But that being said, you have questions, and those questions are important. So we have 2 ways we're going to address that. One, this webinar will be recorded, so you can go back and you can take a look at some of the slides, some of the discussions that I've had. You can re-review some of the questions that other people have asked, or you can ask questions. We do have a chat panel that is being monitored, so you're more than welcome to ask questions at any time. We love them. Please keep them coming. But lastly, I want you to enjoy. This is supposed to be good, informative, and educational, so the only way we're going to do that is for you to sit back, get a cup of coffee. Let's enjoy this. We have an agenda, and it's actually fairly short and sweet. We are going to talk about value versus fixed pricing, and then the different stages of how our firm comes up with a value price for customers. Now, every firm is different. Every firm has a different definition of what value pricing versus fixed pricing is, but I'm going to give you some definitions here and we're going to talk about it. So the first thing, fixed pricing. Well, the first thing is fixed pricing is non-negotiable. So one of the things about fixed pricing, think of it this way. When you go into a restaurant, you have a menu in front of you. Those prices are non-negotiable, 100%. They're not subject to bargaining. You can't walk in and say, you know what, man, I really want that burger, but I don't want to pay you $5 for it. I want to pay you $3.50. It's not going to happen. All of the prices in that menu are going to be the same regardless of who you are. That is what fixed pricing truly is. It's a non-negotiable price that is charged for a product or service that you do for your customer. It is something that you cannot change or you will not change, and it can not be changed for a longer period of time or a shorter period of time. In our case, we used fixed pricing for our tax reporting. So once a year, I'll increase the price, and my customers are well aware of that. But you can come in, and that price is not going to change. I'm going to charge you $75 for a tax return, or I'm going to charge you $950 for a tax return, depending on the complexity. But you could be client 1 or client 10, that price is not going to change. So fixed pricing doesn't change, it's non-negotiable, it's held constant for a period of time, and you either pay that price or you don't buy the product or the service. That's fixed pricing. But what is value or value-based pricing? Can't even speak today. Value pricing is one of the most commonly bantered about pricing strategies in our demographic, but it's also the completely misunderstood. There's so many discussions that go on right now in social media. I've been a part of some of these conversations. There's been a number of breakout sessions at different conferences. There's professionals in our industry, Ron Baker, Mark, Tanya Hiltz, that teach people how to implement it. But what does it really mean? So Investopedia defines it in this manner. It is a price setting strategy where prices are set primarily on a customer's perceived value of the product or the service. So another way to think of it is that this pricing strategy is a way of deciding the price for a product or a service based on what the customers think it's worth and what they are willing to pay for it, rather than the cost to produce and or provide that service. Big mouthful, but here we go. Some of the points for, or not points, but some of the things that I like to think about when I am talking about value pricing is that services within that price structure are negotiable. So for example, if you were to go to my website, you would see under bookkeeping services, I have 3 pricing structures. We're going to call them simple, essential, and plus. For the simple, it is basic bookkeeping. And there are some items, some services in that particular simple structure that I can take out to lower the price. Same goes with the essential, same goes with the plus. So I've got some flexibility there. You'll also notice that there's prices on the website. Now these prices, along with the disclaimer at the bottom, says that I can and do charge this price in certain circumstances, but it is dependent upon the customer's needs, requirements, and what their pain points are. So services can be negotiable in a value pricing situation. But the price is also based on a perceived value. What does that mean? So when I'm sitting down with a customer, and we will talk about this further on in this webinar, when I sit down with a customer, we have a long discussion where I generally tend to sit and listen and hear what it is that they have to say. The more I talk, the less they don't. The more they talk, the more I learn. And from that learning opportunity, I'm able to decipher what's really bothering them. It could be they don't have time. It could be they don't understand how to do something. They're frustrated by where to categorize an expense. They may not even know how to set up a chart of accounts, which is fine. It's not their job. But at the end of the day, they're telling me what's bothering them. They're telling me in this conversation what's causing them the worst frustration. So from that, I can perceive a value. It doesn't have a number to it yet, but I can now rate what that pain point is on a scale of 1 to 10. And that is now going to be factored into my pricing structure when I meet with that client later on in this series of steps that we're going to do. Prices can change, and they do change. Every one of my customers have a different pricing structure. The services basically do not deviate from my different packages unless there is a pain point that my customer has that I need to solve for them. So for example, I have a customer that doesn't have payroll. Drop shipper, one person, sole proprietor, makes a ton of money. Not that that has any bearing on it, but it's a one-person show. Obviously, payroll is not an issue, but some of my pricing options on my website show payroll. In this situation, I would actually take that component out entirely. But what else can I put in that adds value for the customer? During that conversation where I sat and listened and didn't speak, they were telling me things. Out of that conversation, I can pull what they value the most, insert that into my package, and this package has now been created specific for that customer. And depending on how much value they attach to that pain point, to that frustration, that will increase the value of the package that they're going to pay for, and they will pay it. Prices are usually reviewed on a regular basis. So again, in my firm, we focus on a 3-month window when you first join with us. We want to review, how's things going? Do you like the services that you're getting? Are you happy with the service? Are you finding that there's something a need that isn't being met? Is there something that we can do to reevaluate the situation? That first 3-month appointment, that first 3-month meeting allows us to adjust and possibly decrease the price or increase the price if the customer thinks that they need more. So these prices are adjusted on the 3-month and then on the year anniversary. That year anniversary allows both parties to sit down, talk about what was working, talk about what wasn't working, and if there actually should be a continued relationship. That, for me, is the definition of value pricing. But with value pricing comes stages, and I've broken it down. And I'm not going to say that I've perfected it, but I have found that the first thing that we do in our discovery stage is a 30-minute telephone conversation. The customer will sit down, it's either virtually or it's in person, and they give us a rundown about what they feel their situation is, what their frustrations, what their pain points are. And this 30-minute conversation sometimes goes for 45 minutes. It depends on the customer. If they've got a lot of anger, a lot of pain points going on, I'm not going to kick them to the curb because they're not done speaking yet. I'm going to sit and I'm going to listen. This is an investment into the relationship that I am willing to put forth so that we have a great relationship going forward and a happy customer. The next thing I'm going to do is I am going to get to know my customer. And this isn't talking about what type of business that they have. This is what they value. Maybe it's time with their family. Maybe it's an Audi. I don't know. Perhaps it's wanting to grow their business, with a 3-year projection of where they visualize themselves. That initial get to know you is really important for us to start sitting down and understanding what it is that customer actually wants. We also share beliefs. They share with us what they see and what their projections are going to be. And when I'm saying projections, I'm not talking money. Where do they see themselves? Do they see themselves as a bigger organization? Do they see themselves changing from a sole prop to an incorporated firm company in 2 years? What is it that they're envisioning? Again, what does this have to do with value pricing? We want to be able to see what it is that we can do and how we can help them attain that. And we will build that into our pricing structure, whether that be now or 6 months from now. We're just doing a little bit of due diligence. During this 30-minute conversation, we are going to listen to you. There's a lot of listening on our part, and we hear what it is that they have to say. We take notes. I actually record the conversations now so that I can go back and hear it again. But that's allowing us to be able to totally understand what it is the customer is saying to us. Now, there are times when the customer says one thing but means another. It happens. A little bit of a clarification, usually by email, helps. But generally speaking, listening to your potential customer is going to help you during this discovery stage. And I've already said this a couple of times, but listening more than you speak is going to be a perfect solution to getting information out of your customer. Someone said to me one day, and I thought it was funny, but it's so true. You have 2 ears and 1 mouth for a reason. Listen more than you speak. And this has become something that we hold true to when we sit down with a potential customer. So now, what's next? We're still in the discovery stage, but we want to value add our potential customer. What does that mean? For us, after we've heard what the pain points are, what else is it that our customers are looking for? Sometimes they don't even know what that is. So now I'm going to start having a dialogue back and forth. I've listened to them. They've told me what their situation is. They've dumped their frustrations on me. And now I'm going to tweak what they've said. I'm going to ask a couple of questions. Sometimes those questions will lead to answers and helps them understand what they value, which then, of course, will help me value price them. But we're on step 2, because there's still a step 2 to this discovery stage. And this one is rather intense. It's called our questionnaire. After the initial conversation, we send a non-disclosure agreement to our customer, an NDA, so that they are comfortable with sharing information with us. That allows them the confidence to share financials, to share information about the company, perhaps some personal information about themselves that they wouldn't share with anyone else. And it allows them to feel confident to thoroughly give us a documented discovery step when it comes to completing the questionnaire. But what is our questionnaire? It is a 17-page document that we sit down with our customer to help them fill out. I have found in the past, through trial and error, that if I send this questionnaire to a customer and leave it with them to complete, I get it back half done. I get it back in bits and pieces, and it may already take me another 30 minutes, 40 minutes to get the rest of the answers. I sometimes don't even get it back at all because the questionnaire scares them. So we have found over time that if we sit down and we go through this questionnaire with our customer, it is a lot easier to get the answers that we need, and it is worth the time. So what is the thing that we have to look at in this questionnaire? It's an investment for both parties. I have seen a questionnaire take 2 hours to complete. I've seen it take 45 minutes. It depends on the situation for the customer, but they're realizing that we're willing to invest time into them, and they in turn appreciate that. This is still all free, by the way. This is their first real opportunity to share confidential information. It is also an ability for us to get an understanding of what the expected scope is going to be for this particular project. We talk about payroll. We talk about HST. We talk about what the expectations are with respect to accounts receivable. We talk about accounts payable. We talk about payment of accounts payable. We talk about financial statements and how they wish to receive those financial statements. Are there customized reports that they're looking to see? Is there something special that they're looking for out of their bookkeeper? This gives us a thorough understanding, and this is why it's 17 pages long. What else do we do? We learn answers to questions, and these answers help us in a later step. But lastly, and this is the best part, we discuss the applications that a customer may or may not need to invest in. This, well, it's not the last part, but it's one of the more important parts. Depending on the situation, a customer may need to invest in more than one app. So let's look at someone who has payroll, who has accounts receivable that needs to be collected. We're looking at Housekeeping for collection and fetching of documents. These are applications that needs prices attached to it. We also need to talk about how they're going to be paid, because in certain situations, we don't pay for these applications, the customer does. Our last step, though, is discussing the level of service that they require. Are you looking just for basic accounting? Are you looking for something a little bit more complex where we talk about your growth? Are you looking for budgetary requirements? Are you looking for someone who's not only going to be handling your accounting functionality, but you want them to be a sounding board, a mentor, if you will? These are levels of service that we need to sit down and discuss so that we can best suit a price to the customer. Now, step 3. We're still not out of the discovery stage. There's still additional information that we need. It is the last step to the discovery stage, but this is what we need to find out. We need to find out bank and credit card month-end statements. So we do ask for this. I want to see the number of transactions. I want to see how many credit cards you actually have. I want to see if you have those 6 bank accounts you told me about and how far back they have or have not been reconciled. I'm also going to ask for lines of credits. I want to see those statements. I want to see your last balance sheet and profit and loss, the last time it was reconciled. Now, it could have been your year end previously, or it could be up to date depending on what your current structure is. I'm also going to ask for additional documentation, and that can be anything. I've seen it be documents from another service that you use. So for example, we have a bed and breakfast. They use a program called Survoy. I want to see the documents that come from there, the reporting that comes from that. Now, we've gone through step 1. It was the discovery stage. The next step is price evaluation. And we have steps here too. The first step is discovering your personal break-even point. And I'm going to make some assumptions here. When we started our value price journey, we analyzed TD Accounting Services to figure out what our break-even price was for each customer. Yes, that changes, and we do review it on a quarterly basis. But it is based on our monthly fixed costs and customer variable costs that we agree to absorb, along with, a rudimentary number of hours that we assign to complete each customer on a monthly basis. So from that, we are able to discover what our average break-even point is. That is step 1. The next thing we're going to do, once we know our fixed and variable monthly costs, is discover what our minimum number of customers to service is. Now, completely subjective. In our case, we are a firm, so we have a number of bookkeepers here that can handle a workload. You may be a sole prop. You may be just a single person running your bookkeeping business. How many customers can you handle? Of course, we have automation, that helps, but knowing what that is, knowing what your fixed monthly and variable costs are, will help you figure out what your break-even point is. Once you figure it out, we all know the equation. I'm using air quotes here. Cost divided by number of customers gives you your break-even point. And then we can calculate what our optimal profit margin is. Again, completely subjective. But all of these points are going to help me discover what my break-even is. And then I can move on to the next step. The next step for price evaluation for me is reviewing all of the answers and quantify them from the discovery stage. So what does that look like? Well, I sit down and I highlight all the main points. If John, we're going to call him John, had a lot to say, He sat there and he's verbalized a number of things. It could be as simple as, I hate doing payroll because I have to do it at 8 o'clock at night and I'm missing time with my kids. It could be, you know what, I have a turnover of employees constantly and I don't understand how to fill out the ROE. I'm constantly missing my salary remittances and I'm getting all of this interest and penalties because I didn't pay it on time. I'm not submitting my HST in a timely fashion. I don't know. There can be a number of different things. Or my favorite, you work with a lawyer, they have to have their trust accounts reconciled by the 25th of the month. I haven't reconciled by the 25th of the month. Great. So pain points, they've highlighted them. The next thing that I need to do is to analyze which applications will help eliminate those pain points. Maybe the customer has said, John has said, oh, with my last bookkeeper, I had to drive the documents to their office all the time because they wouldn't come to me. That's a pain point, and I can understand it. Receipt bank, great, let's use it. I'm constantly missing and not paying my salary remittances on time. Fantastic, wage point, to the rescue, love it. I'm not collecting my AR as quickly as I would like. I have my AR invoices outstanding for 70 plus days. Invoice Sherpa, thank you very much. What am I doing? I'm listening to what they said, and I'm finding applications that are going to help solve these pain points. Next step. I want to look at what it's going to take. If my customer is taking 7 hours a week to do this work, or 12 hours a week to do this work, I want to sit down and figure out what this is actually costing my customer, my potential customer. So let's say John is, I don't know, a mechanic. John charges $65 an hour and his profit margin on an hourly wage is $30. So he's going to go and work on his back office in his bookkeeping, and he's taking 7 hours a week to do it. Well, the math works out to be $210 a week. And if I'm looking at that on a monthly basis, that's $945 that he's quote unquote spending for bookkeeping. So now I have a number to work with. From that, I'm also now going to sit down and I'm going to work out how much it's going to cost for him to get his year-end done. Now, this can be his taxes. This could possibly be his T2, depending on the situation. How much is that costing him? Now I'm going to add that figure to it. So let's say he's a sole proprietor. He's got the $21.25. We'll say it's $200. We're now up to over $1,100. Sorry. 945 times 12. We're up to over $11,500 a year that he's spending in accounting. Well, I'm pretty sure I can come in lower than that, but I still want to give him the value that he wants because he needs to see value, but he also needs to see results. So now I've quantified it. Step 3, decide what the value adds are for each levels of service. So what happens? You've talked to your customer. He's given you all of his pain points. You've sat down and you've analyzed what applications are best going to satisfy your customer. What are the value adds that you're going to add for those levels of service? Because you offer 3. You offer a basic, a mid-range, and a high-end. Depending on who you speak to, your high-end can be very, very expensive. I believe Seth David charges $5,000 for his. Or you can keep it reasonable. That's completely up to you and what it is that you're looking for in a profit margin. I have had an aha moment where I thought I had overcharged on a high end, and the customer looked at me and said, yep, unfortunately, I'm not accepting that. And they gave me more because they saw more value in what it was that I was doing. I undervalued myself, and it does happen. But when you sit down and you figure out what those value adds are for each of those services, take that thought into consideration. It's not what you value, it's what they value. Now, thankfully, that customer was pretty good, and he was a friend, so he paid me the higher rate. But remember that when you sit down and you work it out. But what does that entail? What can you provide to your customer that doesn't cost you money? Maybe it's customized reporting. Perhaps your customer has a specific report that they need to see on a monthly basis. You can set that up as a customized report, and you can have it sent to them on a monthly basis, depending on the time that they wish it. Maybe they want it at the end of the month. Maybe they want it on the first of the month. You can set it up as an automatic report. It didn't take you any money to do it, and the customer's loving you for it. What other points of concern can you address? These are value adds that you can give that don't cost you anything, but make you look good. And these value adds is what drives up your price. Scaling these value adds as priority levels. So here's an example. When it comes to problems with my customers, they want to reach out to us. If you purchase our basic plan, we respond to emails only, and we will talk to you every 6 months. If you're purchasing our mid-range plan, we will talk to you quarterly, and we will respond to emails outside of that. But if you go with our high-end price, not only do you get your own Slack channel set up, you have my personal number on speed dial, and you have a monthly meeting with your bookkeeper to discuss any outstanding issues. Real hands-on service. These are scalable value adds that offer different levels of accessibility depending on the level that you choose or your customer chooses. Next option, step 4. I have lots of steps here. Now we're actually going to sit down and price. But the first thing you need to do is look at different tier levels. So in this example, I'm going to say that we have a basic at 10%, essentials at 30%, and premium at 50%, okay, with a growth margin. Now let's look at QuickBooks Online. Let's just assume that the basic plan is essential and that a cost of $27 to the customer if they purchase the subscription themselves. Since we are the professionals and we take advantage of the Pro Advisor pricing, our price is 50% of the posted rate. Now we have an actual hard number to start with. So if we're taking 50%, we have two options. We can have the customer absorb the full cost when we value it into the pricing, or we can give them the 50%, okay? So in this case here, I'm going to say that for the customer, I am going to price in my basic plan the cost of an essential QBO plan is $15. If I'm going to price it for a mid-range, I'm going to price it at $18. Again, I'm giving them my 50% cost with a little bit of margin so that I'm still making money on it. Premium, $20. Now, next step. Next step is my Receipt Bank subscription. I am choosing to work with Receipt Bank because of the fetching capabilities and the ways my customers are able to interact. There's so many values to Receipt Bank right now that for most of my customers, it's actually where they choose to go. I do allow them the choice. But for Receipt Bank, they have different levels of service. And depending on what they choose, it depends on the number of transactions. Receipt Bank has many different prices. Some people have fixed plan cost as Pro Advisors, some don't. I happen to have a fixed plan price. So what I've done is I've sat down and I've worked out, based on the number of transactions from the discovery stage, what works best for my customer. So in this case, we're going to say the customer has less than 50 transactions. Basic, $25. Essential, $30. Premium, $34. Notice these are hard numbers, easy to work with. This isn't value. I'm just working out a price to start with. The next step is QBO Advanced Payroll, because in this case, this customer does have payroll. Same thing. I'm going to sit down and I'm going to take the basic rate and I'm going to add a percentage for growth, my margin, if you will. 31, 36, and 42. My next step is going to be Zapier. Now, there's a number of you on the call. I did happen to take a look, and some of you are users of Zapier. Who here loves Zapier? I know I do. And what we've started to do is create Zaps for our customers. And it's a value add that we do, especially for the higher subscriptions. But some of the basic Zapier Zaps that we can do, we give to all of our customers. As we get larger up in scale, larger up in size, larger up in package, we give them more advanced Zaps. But we do charge the customer for it. $20 a subscription plus an additional growth margin attached to it. We're still getting a monthly number here, guys. We're not done. And the next step is the time or the investment that we give to each client. So depending on the client, our average customer is 4 hours per week. Not all customers is 4 hours. Sometimes they're 1. But we do value, just in case, every customer at 4 hours per week. And we do it based on a dollar value that I am not going to sit here and discuss because this is personal. Sorry, that was my phone ringing. I just hung up on whoever it was. I hope it wasn't my father. There we go. On Do Not Disturb. So we sit down and we work out the monthly investment that it's going to cost. And this is 4 hours per week at 4.5 weeks per month. And it's averaging, our average investment is about 2.5 hours, but this also allows for tax planning for the customer too. So we're building it into the price so that they don't see it. And this is allowing us to come up with a monthly price. So as you can see, based on the situation, now in this particular case for this particular customer, they're getting QuickBooks Online Essential. They're getting Receipt Bank with 50 receipts that are being processed in a month. They have advanced payroll. They have Zapier, and they have 4 hours of our time, which is never used, but we still allow for it. $693 a month. Now, if you remember back to what our original example was, the customer was spending over $900 a month to provide the same service. And when we sit down and we talk to the customer, we bring these numbers to them. So here is our basic at $693. Here is our essential at $819. And here's our premium at $944. We're also including your tax return, and you're getting a deal. So not only are you seeing value in 3 different ways, which is, 1, we are showing you that you're no longer in pain. We're taking care of that for you. Your bookkeeping is being done in a timely fashion, and you're no longer spending your evenings, weekends, or any other time worrying about it. All of your salary remittances are being paid on time every month. Your taxes are being done. You got time back to spend in your business and make more money, and you're spending less than you were before. That is value pricing to our firm. Does that make sense? I'm going to assume the answer to that is yes. Now, I'm going to summarize. There are a couple of different steps that need to be taken. You need to know what's going on with your customer. You have to have the discovery stage. It can take us anywhere from an hour and a half to 2.5 hours. And it is an investment on both parties. There is an NDA, there is a 17-page questionnaire, and we go through these steps for each and every customer if they reach this stage. If you hit this stage, generally speaking, you end up being a customer of ours because we have qualified you. Understanding your margins. How much money do you have to make this a profitable venture? You did not get into business to not make money. You need to calculate your price levels. And there are so many different factors that are part of that price level. What are the cost of your applications? What is the cost of your time? What is the cost of, it's mind-blowing, calculating your pricing levels. It took us over a year and a half to sit down and perfect this. And then the last stage is presenting it to your customer. Now, we've learned through trial and error that sending it out in an email isn't always successful. We take the time and we sit down and we do a face-to-face. Face-to-face can be either done using a virtual situation, or we physically sit across the desk from our customer and we talk about it. And we sit down and we do a value review. How much time did it take you to do it? This is how much it cost you. This is the prices that we're providing to you with the different levels of service that you're going to get. We have found this to be an extremely successful way to not only increase the profitability within our company, but to provide value to our customers and keep them satisfied and happy. So we are now to the next stage of this webinar, which is question and answers. Does anyone have a question?
All right. So thank you so much for that, Tammatha. We got quite a few questions, so let me just get you one here. Okay, Carol is asking, and I think you already answered it, but just double checking. What do you charge for your discovery stage?
$0. And the reason we don't charge anything for discovery is this shows the customer that we're going to invest into them. It's another value add.
Oh, that's awesome. I think Joe has a question lined up here.
Well, there's so many, I just lost it.
How do you deal with clients that are, telling you, hey, to me, bookkeeping is just data entry, and they don't really understand like the value that you're bringing? How do you kind of address customers or clients that come to you with that kind of mindset?
If you'd asked me this question a year ago, I would have had a different answer. So with today's technology and advancement of cloud technology, businesses are starting to realize that we're not just data entry anymore, that things have changed. And if that's what they're looking for, man, I've got an entire Rolodex of people that can help you with just data entry if that's all you're looking for. If you're coming to my firm, you're coming for the value that I'm giving. You're coming for the value that I'm offering. And it's all in how you project it to your customer. I personally will sit here and not talk about data entry because that's not what we do. We do more than that. And that's why I think we don't get that question as much as we used to in the past. Previously, yeah, I actually portrayed ourselves as that being part of what we offer, data entry. Those words are no longer part of our vocabulary. We advise, we help, we add value. And if you're looking for someone to do just data entry, you are going to get what you pay for. I know that sounds really harsh and really cold, but what kind of customers are you looking for in your firm, in your company? That's what we do, is we look for the customers that we want by how we express ourselves. Does that make sense?
Yeah, for sure. I think that's a really good way of putting it as well. Puts a lot of things into context.
I have another question. So how much detail are you providing your clients when you present these plans? Like, are you actually providing them with pricing to how much they will be paying for like those applications?
No. That's for me. No, I do not do that. My customer, if they choose to go and look, because these prices are coming directly from these websites. I'm not giving them the backdoor prices. I'm giving them the front end prices. So if you go to Receipt Bank, 50 and less transactions is $25.99 and up to $100 is another price. They can physically go and see that. If the customer wants to sit down and analyze how much each of these costs, here's the websites. I'm obviously not, personally, this is how I feel about it. I haven't expressed the value in a strong enough way for them to commit. So it's all in your presentation and how you present it to your customer. It's not about how much each application cost. It's not about the time that you invest, those 4 hours. It's about how you express the value to them. So it's going back to that value add conversation. That investment of 2.5 hours free, that's a value add. Sitting down and saying, Mr. Customer, $30 an hour is what you charge for, being a mechanic, and you invest 7 hours a week. That's costing you this much per month. That has got to be one of the biggest commits that I get by having that conversation, that part of the conversation. And I usually leave that to the very end. All of a sudden you see the light bulbs go off because it's all about the money. It comes at the end of the day, that's why we're all in business. We're here to make money. I'm showing you all of this value. I'm giving you all of these things, but I'm solidifying the deal in the last sentence. This is how much you spend every month to do your bookkeeping. And this is how I came up with that number. He can't refute it because he gave them to me. He gave me those numbers. And here are the prices that I'm offering you with different levels of service, which are over and above what you were doing for yourself. I get the commit every time.
Okay, thank you so much for that. So another question, a really good one I think here is, there's a question here asking kind of what is your timeline for your onboarding process, basically from the initial customer inquiry all the way to discovery, and then you're going back to them and kind of getting them signed on board. Like, is there a fixed time that you have, or is it like different per customer? How do you have that set up?
Every customer is different. And the reason for that is every customer needs different applications to be set up, a different ecosystem to be created. It could be a very simple situation where it takes 2 weeks from start to finish. It could be extremely complex and take 6 weeks. It depends on how much hand-holding the customer wants to do. Perhaps the customer, and this happens a number of times, where the customer wants to control their costs or what they feel their costs are. So they're going to choose a lower priced package. In that circumstance, I am expecting that you, Mr. Customer, are going to do some of the work. So in that particular circumstance, there's some training involved. Now, what I have done is I've invested significant amount of time in setting up training for customers that we drip out to them over a period of time to help them understand how to create a check, how to connect their bank feeds, how to, pick something. We've created step-by-step instructions which we feed to them slowly so that we're not overwhelming them. This can take up to 6 weeks. So each situation needs to be evaluated, and I have seen it be as small as 2 weeks, but as long as 6 weeks. Because I've invested a lot of time in creating the system, it's not costing me anything now. In the past, there was a lot of front-end loading. I spent a lot of time building this. But now, it's not costing me anything, and I'm reaping the rewards.
Yeah, that gives a lot of insight into that. Thank you so much. Another good question. So someone's asking, why would you not provide all of your clients QBO Plus? Why are you kind of segmenting into Essentials or Plus?
Well, because personally, I believe that in certain situations, a customer doesn't need a Plus. I don't believe in selling a customer something that they don't need. Simply put.
Okay. And,
very few customers of mine actually are on Plus unless it's needed. In some cases, it's needed. They need the budgetary requirements. They need the advanced reporting. If I have someone who's just small, i.e. a farmer, for example, they don't need plus. They need essential. So I look at their situations and I tailor the QBO subscription to their needs.
So, Tammatha, have you ever had an instance where you felt that you realized that you estimated the monthly charges too low?
Yes.
And what did you do to overcome that?
At the 3 month, when we have that 3-month meeting, this gives us both an opportunity to adjust. Now, generally speaking, I call that a mistake on my part. I generally don't fix it until the end of the year because we do reevaluate and do a whole price restructure again at the end of the year. If it is a major mistake, I will bring it up with the customer. Generally speaking, I tend to eat it for the first year. It's part and parcel of learning how to value price. I'm not going to tell you I didn't make mistakes at the beginning. I made some doozies. They were pretty awful. I'm not going to lie. But this is where I learned about price margins and really sitting down and analyzing my structure before I started delving into value pricing. I needed to make a profit because I got burnt twice, really bad, to the tune of about $2,000 a contract. So it was pretty extensive. And from that, that's how I've come up with this system. Do I get it right every time? Nope, I do not. I do not, and I will not say that I do. But I've never undervalued the work that I've provided. I'm still coming out with a profit. It might be small and it might be slim, but I'm still coming out with a profit every time. And it's usually because of how I price the applications.
Okay. Thank you so much. I think we have time for a couple more here. We have a question here asking, how do you estimate for a new business that is just starting? So, if they don't have an idea of how many transactions they're going to be doing or what type of transactions they're looking to do. Do you ever run into clients like that?
We do. That's one of my favorite customers. They come to us with the beginning stages of, I want to start a business. And we walk them through it. And we restructure the price every 3 months. We don't have year contracts. We have every 3-month contracts.
Oh.
This is how we eliminate that, because as a business owner, it's nice to have this plan and it's nice to have this idea, but let's be realistic. What we dream and what's reality doesn't always happen. So what we do is we sit down and we analyze it every quarter. How did it go? And I have found so far that is what's best for my customer and for us.
And so when you already set the price for your clients, they already agree upon it. But then how do you put limits for your clients that are very high demand?
No scope creep?
The price that you provide them? Pardon me?
No scope creep?
Yeah, pretty much.
Yeah, we use practice ignition as our way of solidifying the engagements. We also use Arrow. And I am the salesperson in our practice. So I'm setting up the Arrow workflows. And if a customer requires something over and above a specific workflow, then they have to come back to me. That customer ends up, I don't know, let's see. For example, we didn't discuss doing your corporate T2 as part of the engagement. And all of a sudden, we come to the end of the quarter and I thought you were doing my T2. So now this customer ends up coming back to me, not my team, and we talk about it. Well, this is over and above. Let's work this into the engagement. We stop it here, we restart it, but we increase the price by this much to compensate for that T2. We don't allow for scope creep. Again, another something we've been burned on. quite a bit, and it was my fault. So I found ways to, I'm not going to say eliminate it, because we do give away things occasionally, but we don't allow the customer to stretch beyond the boundaries of what we consider acceptable.
Okay. Thank you so much for that, Tammatha. So I think we have time for one last question, and then we'll let you go. So other than Receipt Bank and Zapier, which you mentioned, are there any other favorite apps, or do you have any other favorite apps, recommended apps that you kind of integrate into your business?
We actually have a tech stack, I call it, for the average customer. So it's QBO Essential, Receipt Bank, WagePoint, Invoice Sherpa, and Zapier. So we do have a 5-piece tech stack that we use, but each customer is different, right? You may come to me with inventory. So now we're going to discuss inventory. You may come to me with another problem that needs to be solved, and this is where we'll start looking at other situations, i.e. a customer relationship management app. It just depends on the situation. This is our 5, this is our core, but we will look outside of the core to help a customer.
Okay, that's great. So I think that's everything from our end. Thank you again so much for taking the time to take us through all this. I know I got a lot of value out of it. I'm sure our listeners did as well. So thanks so much.
Well, I got a question first. Will this be recorded? Or I mean, will
This is being recorded, and it will be shared with everyone that's in attendance today.
Okay. So,
Or at least I hope so, including me.
yeah. No, for sure. No, it will be recorded. We just confirmed that as well on our end. Sorry about that. But yeah, thank you so much for your time today. It was a pleasure having you as always. And I'm sure our listeners had a good time listening to everything that you went over as well. Thank you so much, Tammatha.
If anyone has questions outside of this, I know this is only an hour and it goes really, really quickly. I don't mind answering questions. You can always reach out. It's part of what we do.
And they can reach out to you just through your website?
The website, they can reach out to me personally. You can reach me at admin@tdaccountingservices.ca. And definitely we'll sit down and discuss any questions that you have. I don't mind doing it.
Perfect. Thank you so much. I'm sure some people will definitely take you up on that offer.
Perfect.
So that's everything from us, and thank you so much for again coming and doing this with us. Hope you have a good day. All right.
Have a great one. Thanks, guys.
Bye.
Bye.